Well, happy Monday to you. It's October 10th. Joe with you here doing a market roundup. And it feels very familiar to last Monday's market roundup as we come off of a pretty aggressive sell-off from Friday. Let's jump into it, guys. I've got my 2 cents and my opinion. Follow along. By all means, take responsibility, though. So let's get into the market analysis. It seemed like Tuesday and Wednesday's rally just completely erased, like it didn't even happen. And that's kind of where we're sitting right now. Right back down to some support levels, especially on the Qs. The SPY is a little high, just off a little bit from previous Friday's low. But boy, it didn't take long to get back down there, especially after that move. So where do we end up today? Not too bad. Dow, the S&P, and the NASDAQ still down, but the NASDAQ being down over 1%, I believe, has a lot to do with AMD's move. News from last week saying that they're going to miss next quarter by $1 billion. Give or take, right? Just shy. I imagine that's dragging down a whole lot of anything in the tech sector, especially semiconductors. In fact, I got a couple of charts that are in that area that look good for bears. The S&P or the SPX down 0.75%, and the Dow hung in there at a good old down 0.32%, flat. Now these did come off the bottom substantially, somewhere about midday. It looked like we were going to roll over and fall apart. But still a bearish day, a very bearish day. The volume was not nearly as big as Friday, but we didn't have quite the push when it came to some of those economic numbers that came out on Friday that were actually stronger than expected. And strong means the Fed has to stay tough, right? So bearish sentiment out there, absolutely. And it's one of these situations where Rob talked about this last week on the Sunday Trading Room, saying that good news is bad news is good news. Well, that is definitely the truth, especially when it comes to what the Fed's looking to do with this economy. They want to cool it off, and we are not cooling off. I don't know if that's good or bad. Probably bad. Bad for the markets. So advanced decline line 65.30, 5% pretty much flat, and then below the moving average 84.16. That was 85.15 last Monday, so a little bit of a tick over. So what's going on? Well, let's take a look at this chart. Here's the SPY. Corey was talking about a cup and handle, and I do like the cup and handle. I think that's a pretty cool. I mean, it makes total sense because I can see it as well. And let me do my best to try to draw this, folks. I believe this is that support level. Here's the cup and maybe a little bit of a handle. Boy, I hope I got that right. Or maybe we go all the way back over to this area. Yes, folks, I'm not a cup and handle guy, but I am a support and resistance person. So you can see that here we were on Friday of last week. Monday, Tuesday comes out. Wednesday looking pretty good. Consolidating Thursday, Friday. Today, right back to where we were. So, if you slipped and fell and we were in a coma from last week, you didn't miss anything, except for just a little bit of a blip. Now, what has that got me leaning towards? Oh, I got to be bearish here, guys. Take a look at the VIX. It's in a similar situation where it's pushing back up to its previous highs. And I have to echo what Darren said. I'm thinking more towards the high 30s, low 40s for a capitulation on this chart. We'll see. That's my opinion. Isn't opinion fun? But be leery. That last bear rally that we saw last week is just anemic, to say the best. So we'll see if these markets try to muster some sort of consolidation here or a bounce. I don't see it happening. So let's move over to the Qs, and you can see that the Qs are very similar to the SPY, except it's already at the lows from last Friday, and it slipped a little bit lower. Once again, guys, it's probably because of AMD coming out and say that they're going to miss those numbers next quarter. So you've got a whole bunch of other techs that are also slipping as well. Now, this looks pretty ominous. So does the last chart. If I had to throw out a dart and guess, or if I have got my bears, I'm just going to stick to them, especially when I'm waiting for capitulation. So we'll keep an eye on that VIX chart for confirmation. In the meantime, when I take a look at this sector heat map, today, as a standalone day, not a lot happened. Microsoft down quite a bit, but Apple hung in there. Now, Apple got punished quite a bit last week, so maybe it just needed a breather. But look at those semiconductors. AMD down another percent today. AVGO down almost 5%. You can see it. So in sympathy, worry, definitely a lot of fear there. Energy I thought was pretty interesting. This is something that hung in there. Oil actually got into the 90s per barrel. It slipped. Well, obviously it's down 1.9% today, but it's still pretty strong. So you can see that it was red today after a pretty good bounce or a surge to the upside on Friday. Well, where does that leave me? exactly where I was last week. That's because the last time I did this class was Monday of last week, and we're in the same spot. So going to a -1 here because we're at those support levels, and I'm going to keep it as a -2. I want to go -3 because I really don't want to get too far ahead of myself and say, oh, tomorrow's the day that we roll over and fall apart. But boy, tomorrow could be the day that we roll over and fall apart. I know we did close off of our lows, so we could get a hesitation day. We do have a pretty heavily followed CPI number coming out on Thursday, but we do have a PPI on Wednesday before that. Now, that's the CPI that I think the most focuses on. We do have some retail sales and things of that nature, but just the reaction to that CPI number over the last few times it's happened. And take a look, folks. Anytime you see this chart slip red or have a huge bounce to the upside, it's usually in correlation with that CPI number all the way since back in June. So I've got to stay on the bear side and just be realistic. Potential trades-wise, all my bulls have red candles on them. If they didn't participate on Friday, which most didn't, I'm talking I've got SLB, I've got APA, PDD. I mean, I've got a lot in the energy and utility sectors, which held in really well on Friday. Not so much today. So I don't have a lot of good bulls to look at. Doesn't mean that they're bad and I got rid of them, but they all have red candles, meaning this was more of a general sell-off than Friday was. Kind of weird to say, isn't it? I do have a couple of sideways. ETSY and Toll Brothers of all. Can you believe that? I imagine I'd see a lot more weakness in anything to do with real estate moving forward, and I do have some bears as well in that sector. But mostly, like Zoom, Nvidia, VMware, IBM, anything to do with the tech is pretty weak. So let's start with the sideways stuff first here, folks. This is ETSY. And why I have it sideways is because it's almost bullish, right? Almost bullish. Well, what do you mean by almost bullish, Joe? Well, I'll show you. Almost bullish means if it wasn't for this deep area that it pulled back into, then I would be bullish. So this is kind of, what do we refer to it as? An expanded range. What this is we got lower lows, but we also have slightly higher high. I guess that's equal. We can just say it's equal high. I saw it almost as a slightly higher high. So if it's going to expand its range here, and as long as it can stay above its moving averages in this area, I'm okay with something sideways. Now, I don't want to do anything bullish for a couple reasons. It's in the retail sector. It's going to hang on. I don't know. Maybe it'll hang on. We'll see. But if the markets are going to fall apart, I don't see how this hangs in. So sideways is the best I could get out of this one. But if it can stay above that circle I drew there, let's call it 106 or above that 20-day moving average, 105, 106. See, if it can stay above this area here, I'll just color it in for you. Then I'm sideways to up on that. Sideways at most. I think that'd be a decent play. It's if you're looking for something sideways, right? Toll Brothers is also sideways for now. I went back and forth on this one, and the reason being is because I'm a little bit worried of just this closing, this gap closing, right? This is a gap up. Looks like it's trying to spill over. It's already below the gap open. But it could come back, touch this, go back up, and kind of chop along sideways. It's in the wrong sector for it, residential construction, which probably is going to get hurt here. But we'll keep an eye on it. You can see all the way back in this area where it actually had support in May. And we'll see if it's going to hold there. If not, you might want to lean a little bit more towards the bear side on that one. So with my two sideways trades, you guys can both hear in my voice that with both those trades that I am a little reluctant to be anything but bearish. All right, I played my hand. Here's another real estate. This is a REIT, and look what it's doing. This is kind of exactly what I thought they all should be doing, and maybe they will. We'll see. So here is the support level that it had set in June. Remember, that was a low. Remember June lows, and it is well past that. In fact, it couldn't even really muster a rally to even retest this 110 or its falling 20-day moving average. And instead, it's rolled over and a nice, comfortable break below 100. I'm fine, folks, if you want to just go ahead and hit the button on this and just let this bleed. It's going to have a hard time going anywhere but south, just circumstances. So I like that on the bear watch. Let's take a look at another one. Here's Nvidia. Broke down today. Real good help on Friday. I really think that AMD news is going to really push a lot of these down. We'll see what happens, especially when we get into earnings season. I think it's next week. Mid next week is where it starts. That's where it really starts to pick up, so keep that in mind as well. But I do like this. It's confirming. Nice breakdown. Something diagonal, vertical, whatever you guys want to choose. Now, the last one I had was IBM, and I took a deeper snapshot on this. I looked a little bit more zoomed out because I really liked how this broke that support that it had early in the year. And it's on its way back to November's lows. You could see that way back on the left there. Let me get my pin and make a chicken scratch on that for you. And I just wonder if that is it. I imagine it's probably going to have no problem slipping through this. This is where it's at right now, right? Just broke below that. This momentum could easily take it down to that 115 mark, maybe a little bit of a bounce and a move lower. Also has its earnings coming up as well. Just don't know how we're going to fare through this season. It's going to be a tough one. All right, so that's what I got for you. Mostly on the bear side. Don't want to be pessimistic or ominous, but that's where these markets are at, and that's where the movement's at, and that's where you can make the potential trades. So a bounce was expected, and it happened. And the sentiment is just bearish, and it completely took over. It wiped that bounce out faster than anything I saw in a long time. We talked about, hey, this is nothing but a bear rally. Bear rallies are fast. Biggest bullish bull moves are in bear markets. And lo and behold, Friday just knocked it all out. Fed looking for weakness in the economy before it changes any sort of policy, before it starts to release its hawkish outlook, before it gets the foot off the gas pedal. We're going to stay at a 0.5 to 3/4 basis point consecutively. They don't care about company news. They don't care about the stock market. All they care about is that we are slowing in the economy. And boy, those numbers on Friday with the unemployment a little hotter than they wanted it. I should say better than expected. And the jobs, 208 versus an expected 200. It's funny how good is bad. Anyways, earnings, check your potential trades. Now, I looked through. I didn't find anything that jumped out at me, but boy, they should be stacking up here real soon. I think mid next week is when earnings season officially kicks off. I truly double check that, but just make sure you're aware of what you are trading, because you don't want to get caught in that. I'll tell you what, unless you're on the bear side. All right, folks. That's it for me. Thanks for joining me on a Monday, and we will see you next time. Bye, everyone.